I get a question from a lot of sophisticated investors, especially guys that come in that are either on bank boards or work at banks, and they say, why are you paying so much for your money? You know you can go to the bank and get money at 5, 6, 7%. And here's why. I was born in the crash. What does that mean? I wasn't actually physically born in the crash, but I was trying to get into real estate 2002, 3, 4. I really started to study and try to figure it out in about 2004. And from 2004 to 2008, I was studying and driving into my market, looking for deals, and actually wearing out. I wore out 3 realtors before I ever got a deal. What does that mean? I wore out 3 realtors. Well, I was pre-approved with a blanket pre-approval, which said what Joshua puts his name on, Joshua gets to buy. I had a capital investor who was actually my father at the time, and he really wanted to get a deal. And I was only trying to buy one deal to offset the winters because I was in a landscape business, and you cannot dig in the winter. So I thought I was going to buy a house every year, fix it up in the winter, and then do one at a time. Well, what happened was I would go and drive neighborhoods. I walked through at least 150 houses. I never really kept actual track, but it was easily 150. It might have been closer to 200 houses before I ever bought one. And I didn't buy one until 2008. It was the fall of 2008 that I got my first deal. And when I say wear out realtors, it was simply I had pre-approval. I had a $1,500 down payment. I can buy whatever I want, but I was working from a formula so that it was called the Mayo formula, which you can look up, or we can discuss it later in another video. But that formula is what keeps you safe in the business. And the market was so blazing hot, and my rookiness, I couldn't understand back end value very well. So my numbers were too conservative to buy. And I'll show you how bad it was. There was a guy buying these houses that they were functionally obsolete, which means they were in a bad neighborhood and there was something funky about the house. Sometimes it was like a chimney walking through the middle of the staircase. Sometimes it was a staircase that was missing headroom. Sometimes it was a bathroom in the middle of a bedroom. That's called functionally obsolete. And this guy, my numbers on those houses were like 45 to 65,000 for purchase price. And this guy that was looking at similar houses at the time, I didn't know him personally. He was closing these deals. And he was paying 110 to 130,000. I'm like, how can this guy do this? My numbers say 65 in this house all day long. It was so hot that these were in what we call the ghetto, but my market really doesn't have a ghetto. But the ghetto is part of my market. And I found out how he could do it, because as soon as the crash came, he bought, I think, 5 different deals. He lost all 5 in the bank because he overpaid. You make your money in real estate when you buy or when you start. You realize it when you sell. So my formula was keeping me from buying, and realtors would just get frustrated and say, I'm not dealing with you anymore. On the third realtor, I actually figured out that if you just do the driving, at least they're not wasting their gas, and she lasted a lot longer. And what ended up happening was that the third realtor that I wore out was a really nice lady. We were working really hard. She let another agent in her office know, I got this guy. He has a pre-approval. He can buy whatever he wants, but he has this formula, and he will not buy anything that isn't meeting his formula. And this realtor had all of the Fannie Mae and Freddie Mac houses that were starting to trickle in, because even though the crash was before 2008, it caught up to us in La Crosse County about 2 years after it really happened in other places. And that was the very beginning of the crash in La Crosse, was in 2008. She heard about me. She called me. She's like, I think I can find you a house. It was actually a bank-owned house that she knew about, that she was getting a listing on. She's like, I think I can get it for 65. Tell me if 65 will be 65,000. We'll work with your math. She showed it to me. The math worked out. And on that first deal, I paid 65. My rehab was about 30. The house was worth like 135 according to my calculations, which we're conservative on that back end number. But if you're too conservative, it actually stops you from buying the deal. As 135 was my back end number. It met my Mayo formula. I ended up physically working on that one myself. I did all the work myself. I had some friends help, but I was on site building it out. I overbuilt it a little bit, too nice to everything, but building a little bit better also stands you in good stead over time. I ended up selling that house I had to go back and get 15,000. So instead of being in at 95, I was actually in at 110, but the back end ended up being, I sold that house for $180,000. So the formula worked. The problem is this agent knew that I was still good for more money. So she asked me if I would keep offering on more houses. So I was offering on houses at 50 cents on the dollar. And that 50 cents on the dollar I didn't think would actually get accepted. And on my second house, I got it accepted within like about 2.5 months. So I'm working on my first house and I accidentally, basically, I mean, I was writing the offers, but I didn't think they would get accepted. I got the second one accepted. And from there, I figured out that it is the availability of the cash in the downturn that you make the most money on. So I am prepaying, goes back to the question, why are you overpaying for your money? I am overpaying for my money now because I am going to have capital when I go to the banks to buy the properties in the crash. I'm going to have relationships with guys that understand that we can make more money in the downturn than the upswing. And I'm building those relationships right now. If you're interested in making a high rate of return on your capital and you don't want the headaches of dealing with real estate and you want a confident return every single time we do a deal, give me a call on my cell phone, 608-306-1199, or just check this email and send it back to me. Or the email that you have, it's Joshua at Real Estate Investment Results. Send the email back to me with any questions and I'll get on the phone with you and explain how we get started. Thanks for watching and have a great day.